See my screen fine? Okay, I can enlarge it a little bit. Okay. Especially the chart we need, not so much the column on the right. Will not work with it today. Yeah, perhaps we start slowly. Okay, excellent. So we start slowly. There are probably some attendees joining in the first minutes. So let me introduce myself for those who are new to this webinars. Today is an open day, so usually these webinars are part of the premium service, specifically part of the signals uh, service we offer. This is how it looks like when you are in. We have the open positions, the closed positions, the strategies, and on the right side there is the analysis we post during the day, also the chips or the signals. Any signal pertaining to a trade is appears here on the right as well. Opening signals, closing signals, and also position management when any of the levels, take profit, exit levels changes. They are published here on the right side. We also publish short videos during the day, and the webinars are part of it. Okay, so today I'm going to do a session like I do usually. We have two types of sessions mainly. One where we go into the market and look for trade opportunities. We'll chart the markets and we identify different types of entries and different types of opportunities. We also may take some of the signals which are automatically generated. We may take them, we contextualize them on the chart, and we explore the risks and the chances for that trade to close in a profit. And then we have also sessions which are more educative, where we present some material to work with. The orientation is more towards education. We talk about how to plot lines on a chart, how to identify support and resistance levels, how to work with oscillators, how to work with etc. etc. Yeah, with order flow. We work here a lot. You will see during today's session, and with lately we have also talked about tools we have at FX Street, like the confluence detector, how to work with it, how to integrate this with other trading methodologies. So the idea here with the signal service, it's not only that you have a series of signals you may want to mimic on your trade platform, although they are intended for educational purposes. That's the idea, and our aim is really to use those signals in order to contextualize them in a bigger picture, and so that you learn how to plot a chart, how to identify levels which can give you an edge, um, and working with, especially with a support resistance grid that will help you with any kind of system, with any kind of methodology. If you're trend following, if you're trend mean reversion, if you trade breakouts, if you trade the news, all this material that we provide here in the group can help you to better solidify your strategy, to contextualize, to interpret the price action, and to contextualize any type of signal. Okay, So let's move on here, and we'll go over the measures and see where we were identifying some entries this morning. We have been publishing here on FX Street Insights, which is the channel here on the right. We have been publishing some trade ideas here on the charts, and we're going to look at them. Okay, so let's start here with the euro. It's a 1 hour chart, and we have identified here as support, which is we might see appropriate for a limit a limit long here. We identified here this support here at 1989. Okay, which may be good for a short scalp, and there we planted a buy order. This level is interesting because it will be the first time the price gets back into this little level where it accelerated sharply here, and it was the first intent to come back into this level, but it stopped shy of it, or I would say, well, it visited rather this level here on the right, this congestion level, but this one is appears more clear here on the chart, and we had a dip. We had a dip today, almost to that level, and perhaps it was it, and we are going to see a further rise from here, at least to this point, to this first destination, which we see interesting here. But would still like to buy on a deeper pullback into this area. We see two levels of interest here, so the whole area here could be interesting for a buy. That's why we have a stop loss at 37.60, if slightly below that that whole range, and or let me see, yes, the 90.49, we have the stop loss, yeah, more or less here at this level, so well above this this zone here, and we aim just for 20.004, which is a very short-term target here. Okay, so this is for the euro what we are expecting. We don't see anything on the upper side of interest unless we go much above here at 22.15. There is something, there is a level of interest here after this sharp fall down here, this breakdown around this swing high here. There might be some interest to sell, but we are far from that level, so we are counting still here with another pullback a little bit deeper than we did 3 hours before, and then aim for a few pips here with a limit buy. Okay, we could look at this same picture from the order flow analysis, and let me just plot it here on the side. Let me go here to the euro dollar. This indicator is this is a positioning indicator where we can see limits and stop orders across measures, and we can therefore identify if those levels we are seeing on a chart, if they make sense from an order flow perspective, from a liquidity model perspective. So let's look at this level here on the bottom where we have our entry at 1989, more or less. Let's look at here. Let's zoom a little bit. It will be more or less here. We have 75, 80, 85. So we see this this level here on the right side. The blue bars means these are buy orders in the form buy limits because they are below the current price, which is the green line. And we see until there, until we reach 1985, more or less, it's pretty void here. That was because of this dip in the price. It already consumed some of the demand, which was located at this level with this latest drop here. So the next levels where probably we'll find buy orders is a little bit below. So here we have 9080, 75. Okay, so it could go deeper into this area. So if the price returns back from here or later from here, it still go deeper here into below our entry level. Okay, and on the upper side, let's check this next resistance here on the 2048.49, 2048.49. We have something here. We are looking at the net figures, so there's this level presents something. It's a little bit more tilted to the sell side. We have a green bar to the left, means these are sell orders which are above the current price. Sell orders above the current price are probably limit orders planted there. They may be also exit levels for buyers. Okay, so we see a little bit here of a sell interest, but it's probably not a very strong level, but it might still attract the price, but it's not a very strong level. Yeah. Where we see stronger levels, 20, 80, 85, and 90. This range here, 20. Yeah, I would start here at 77, 78. I would start. It corresponds to this whole area here where the price broke down. So here we have this dynamic we talk about a lot, which is a support, which we have here with this little dip, and then a break of that support, and then the price trying to get to retest that level from the other side as a resistance, and it didn't get fully to that level. So just above this high here, this spike here, okay, the spike we would not consider as a level to sell, but above that level would be that would probably find more sell orders to adhere to. So that would be a possible trade location here for a sell. And it more or less corresponds here to when we look at the net figures here in the order book. That's where we find more notable sell orders here. Also slightly above at 2090. So the whole area here, 2090 is just the more or less the start here of this candle. Okay, so the whole area here, will be interesting for a sell. We do have this ascending line, which we could eventually start moving around and find a confluence for those horizontal levels and a dynamic resistance. We find this level to be quite interesting. We have this line acting as support here. It was broken here and then retested. Yeah, so we can expect this level to be fairly important. We could also move the line to the next potential level here, to the next potential support. And during all this period here, this week until the 5th this line will be intersecting this area. So all this area will be sellable. We can also look at the line, what it did before. Yeah, we prefer to look at what it did last or most recently, but let's look at where this line originates. If we plot it here on this recent swing low, which is still to be tested on the other side, it fits here with this the bottom of this huge acceleration candle here, and that makes sense. And that makes sense. If you move it down here to this level, then more or less we have it here at the bottom. Yeah, and if we move it here to the low here, to the wick, to the low point of this green candle, it fits exactly with its turning point here. Somewhere in between here and here. So if we can use a range, a whole price range, we can just clone the line and we work out an interesting area, right? So this whole area of intersection, that will be something like, let me just yeah, this whole area of intersection here. I don't know if you can see here trying to draw something here on this area. So we have these areas where both lines or both areas are confluent, right? So that could be an whole area for shorting. Yeah. Okay, so let's move to the next one. We have seen the euro dollar. If there are any questions, feel free to ask. We have a particular way to work here with support and resistance, because the way we work is we use horizontal and dynamic levels for support and resistance, and thereby we can come up with intersections. And these intersections are interesting because they give us another hint, which is the time. Yeah, the time coordinate for that eventual reversal or reaction in the price. So intersections of lines, you can have a double intersection of two dynamic lines, or a dynamic line with a horizontal line, or you can have a triple intersection of two dynamic and one horizontal. And the point of intersection is the midpoint, let's say, of the potential for the price to reverse, yeah, at that level. But it doesn't always happen that when we have an intersection that the price travels to that intersection and exactly at the intersection reverses. But sometimes the price is far from reaching that level, and still the intersection gives us hints at when the price can reverse in terms of time. Even if the price is far from, in terms of price, if it is a far distance from that intersection, the intersection can still give us some hints at a possible turn. Okay, so this is interesting because then we can also add a time value to our trades. If you plan or like to use limit orders, which you can just plant in the market and more or less forget about them. You can also add a time window for that particular trade, so that most platforms allow you to enter a expiration date for that trade. So you can say, okay, in 3 days that trade expires, and it just automatically is dropped from my order book and from the platform, so that I don't have to go and erase old trade ideas. And if the price doesn't reach that level in that specific time window, so the geometry changes, and it might work because you're still using the horizontal level, And especially if an horizontal level is involved, you are still using that horizontal level, which is it gives you a specific price for return, but probably you don't have that double confirmation with the diagonal lines protecting that level. Okay, so we want to enter the market, also having our position protected by layers of support and resistance, right? This is one of um, the requirements to enter a trade there. The other requirement will be that we want to see some velocity, some momentum towards our entry level, because if the entry level, if you are looking um, at the order flow, at the order book, for example, and you see a level where there is a huge imbalance of supply in this case, then uh, we can expect that to work as a target, right? So that level may be working for you as an entry level, but for other market participants, it may be a target, right? And for that level to work out, for you to be in profits as fast in a fast mode, we want that level to prove itself as a level of imbalance between buyers and sellers. And that is only visible on the chart if the price, when it comes closer to that level, if it accelerates. Because if it accelerates, meaning it is going through an area where there isn't much offering barriers to the price, and it aims to reach a level where it can absorb liquidity. The price is always looking for liquidity, so that if the price, which is a green bar here, would now choose to go up, it could probably accelerate up to this level where it would first find the first levels of supply, right? Until then, it will probably not have a lot of barriers in its path, and it will probably accelerate. Yeah, but should it continue to move higher, it would probably, in this case, we have the net figure, but we'll look at the non-accumulative. So if you have an area where you have on both sides, you have orders on both sides, then like here, for instance, so all this area here, let me zoom in a little bit more. Yeah, so all these areas where you have almost, you know, almost the same percentage in buy and sell. Yeah, this does not help the price to accelerate. Yeah, this does not help the price to accelerate. It's when you see um, a big void or a big imbalance coming close, then the price can move faster towards that destination. So one of the requirements is that you can use it with the help of an oscillator, for example, that use or momentum indicator, that the price is accelerating towards your entry level. That always helps. Oh, I have a question here. Welcome. Um, how do you know price has gotten to a resistance support during a rapid price movement, say during a fundamental release? Well, that's a great question. I mean, you know, if that level is a support and resistance by having that chart prepared in the first instance. So you want to have the chart already prepared for that eventual collision of price against a certain level. Okay, so you want to identify the patterns on the price action. If if the patterns or the shapes or the geometry the price has left in the past um, um, are the ones which are usually identified with support and resistance. We use a lot these diagonal lines, and these diagonal lines, as you notice, they are all parallel, right? If I zoom out here, you see that all the lines have the same angle. So what we do is we choose one angle, which we see that it matches a lot of times with the price movements of that particular asset, and we just replicate those same angles into the future. There are different types of angles that work all the time with a certain asset. Okay, it also depends on the time frame you are using. So you want a line that is more or less 45-degree with a 45-degree inclination, because if we go now here from the 8 hour, if we go down to the 15-minute, those lines which will be appear much more flat on the chart. So if you trade a 15-minute very actively, you want to find an angle there, and you will find probably one line that fits into the price section a lot of times between swing highs and lows and breakouts and such. So you want to have that geometry ready on your chart, okay, to say if the price comes back to this level, it will probably find some support or resistance. There can be a swing high, swing low. There can be a level which was support before, it was broken through, and it has yet to switch polarity into resistance, or vice versa, a resistance that was broken, and then the price has still to pull back and prove that level as support, test it from the opposite side. You can observe this dynamic on a horizontal basis, but also on a dynamic basis, okay? So all this geometry, you want to have it prepared, right? And the second point will be to see some sort of acceleration. Yeah, if a price goes duly into a certain level, which you have identified as support and resistance, but it really doesn't accelerate towards that level, but it goes up and down, doing a lot of whipsaws and even violating previous swing lows all the time. That is too much noise. That is not the way the price arrives at a crucial destination, yeah, at a target or at a desired entry level. Usually the price tends to accelerate towards that level because the liquidity is not equally distributed, as we can see here on the right side. This is based on the positions of clients in the broker dealer Oanda, which is a market maker in this case, and they offer this information for free, so you can look at how their clients are positioned, and we look at this as a proxy for the whole market, because usually participants tend to put their stops and targets at very similar places. So we infer from this information that the bigger aggregate is doing more or less the same, right? But it's, as I said, it's just a proxy. And so with the help of this tool, we can also see the areas which are very thin in liquidity, and the areas where more liquidity is being offered. And here, with the help of this tool, you can see that liquidity is not equally distributed. Yeah, and that makes the price accelerate and decelerate and congest and break out. It's basically because of this unequal distribution of buying and selling. Okay, so these are two main points. You may look at also other aspects. You may look at volatility and say, what is the volatility this market displays? usually historic volatility. We talked about this in yesterday's session. You perhaps you want to measure volatility using an ATR or standard deviation with Bollinger Bands, and you want to have an idea of how much this pair moves, so that when it's moving against a certain level, in combination with the support and resistance analysis, you have another hint of information. Say, well, this market is already very high in terms of its normal volatility performance, so it could now slow down, or vice versa. It still has room to go. You can have a look at the periodicity of the volatility, which times of the day a certain market is more volatile, and say I will trade this market only between this and these times of the day, because there is where bigger moves are possible. And if I identify a good level of entry and a good level of exit, with a higher volatility, I can be faster in and out of my position. I can be also stopped out faster, obviously, but volatility can help us in this instance to say, I don't want to enter a market that doesn't move, and I have to wait with that open position, with that margin consumed there, and the market's going nowhere. If you enter a position, the market goes really nowhere. It's for a large period of time, yeah, larger than usual when it reverses direction, then you probably enter at the market at a level which is not out of balance in terms of supply and demand. So you may want to look at the next possible level. If there are 2 or 3 levels in a row, yeah, combined with the other parts of the analysis, with the lines on your chart, yeah, with a volatility, yeah, and then it's also part of your trade management. If you want to be more aggressive and go for the first level, if the market continues and goes for the second and you are stopped out, then that you have this in mind to enter a second time or a third time. Even if you are more conservative, you go for the level that is further away from in terms of layers of support and resistance. You may miss other entries, but you are being more conservative, or you use a combination of other tools like the order book from Wanda, for example, or you go to FX3 to the confluence detector and see, okay, I'm only plotting lines on my chart. I don't want to cluster it with indicators, with moving averages and such, but I want to see levels where these indicators cluster. When I have a pivot point, a Bollinger Band, a moving average, all tied together in a certain area of the chart, I want to see that, identify that area without plotting all the indicators on a chart. So I'll go to that indicator and see if that fits into my picture. Okay, good, excellent question. Thank you very much. Let me go here to the Australian dollar. Yeah, we identified this level here. This is on a 8-hour still. We can see the example here of a level which was tested here slightly as support. The market went higher, it broke through this level, so eventually on a came back, it could prove itself as a resistance now, okay, and do this type of polarity swift. We have also this this ascending line, which I marked here a little bit in bold, because this line we see that it was tested here and then broken. It was more or less the beginning of this large candle. So we could see eventually this line becoming a resistance on the way up. You know, we can also see the wick of this candle reacting to the line. And if I now go deeper, I can perhaps understand the line a little bit better. Yeah, I can see the line here, this bold line, how it acted here as resistance, here as support, yeah, and here how the bodies of these candles interacted with this line. So I suspect prices uh, um, can go a little bit further higher than these two lines are meeting in 2 days exactly. So, but by tomorrow they are close enough here. Okay, because lines are not really fixed to any level. I can put it here on this week, upper week, which is will have the point here, the intersection exactly at the beginning of the fourth. But if I plot it here on the bodies, then it goes a little bit further away to the fifth, to the fifth. So more or less, we are not exact here, but we see that more or less there's potential. And if we look here at the Australian dollar from the order flow analysis, and we go to the most recent distribution. Let's look at the 78.49 or 50. 78.50. Here we see this a big bar here. So this a lot more sell orders than buy orders. Yeah, a lot more. Yeah, so we see close to that level starting at 38.40. We already feel resistance here. Okay, so so this area could be fine for a small scalp. We are in with a trade at 78.48 and take profit 78.28 for 20 pips. Yeah, and a stop loss of 40 pips, 78.88. Okay, well, you will notice there's a symmetry between targets and stops. Okay, there's a whole reason for that. So the closer your stop is, or your exit, be it a stop or a take profit, the closer it is, the higher the chances for it to be hit. So obviously there is a distribution of liquidity that will play a crucial role. Yeah, but we prefer to work with this risk reward asymmetric ratio to enhance our win rate. Okay, and also if depending on the layers of resistance or support beyond our entry level, we tend to put the stop loss on the outer realm of that support or resistance zone, so to say. Okay. Obviously, if the zone is very large, you simply do not place an entry there. You go a little bit further away so that you can have a tight stop, tight, but not smaller than your take profit usually. Okay, let's move on here to another measure, to the dollar Swiss franc. We then identified here a short at the round figure 92. Okay, this level is an horizontal level coming from here. We see there are different picks here. Okay, probably the resistance will start already here. I'll mark this in gray because this is not the first encounter. It's not the one which we aim to short, although there was a reaction already. But because these levels here, this week here and this one, let me just zoom in here, or yeah, bigger. You see these wicks here and this bigger wick. All these wicks, in fact, they were trying to get to the top here, to this one. Yeah, and this probably was already reacting to previous levels. So we don't want to use the first layer of resistance to enter. we go to the round figure, and we used also, in this case, we used the order book to find that level. Let's go here and see that 92.92 figure. We'll zoom in, and we see here this huge bar at the round figure. Usually round figures attract liquidity, yeah, but not always. Yeah. And in this case, we see a huge bar here, so we can infer that the whole aggregate is doing something similar. So that's why we planted an order there. Well, let's go back here to where we are. We have this ascending line here. It's not very strong from a chart perspective because we have a lot of wicks here. I'm just putting here on the bodies of these candles, which were the last ones this line could touch. Yeah. But I could move it also to the upper levels here, to the wicks. Could move it to there as well. Okay, so somewhere here we could see this reaction. And here, so we have the entry at 92. We have a stop loss at 92.40, 40 pip, and 91.80 as a target. Okay, for 20 pip. Okay, I think in terms of the volatility this market is showing right now, I think that a 20 pip reaction will be something like this, so really tiny in comparison with all the movements it is displaying. Okay. Okay, let's move to the next one. Dollar Canadian. We had a sell as well. Okay, this one is further away from where we are now. We already reacted to some interesting levels. Here, for instance, you have an example of this polarity change, but in this case, dynamically. That means a level which was tested here, support. You see this these 3 wicks here reacting to an angle, a certain angle. And this is nothing else than the same angle that we have been using for months and months. Yeah, it's just projected. So this candle here broke the line. So we are expecting that this line further in the future can be tested from the opposite side as resistance. Okay. So in this case, we had a reaction here, and eventually we could have said, okay, this level here, which seems to be resistance, was not fully observed during these later weeks. So we can still say, okay, here perhaps we have some selling pressure, and we could have used this horizontal level. But because we already had this wick here, this upper wick, yeah, if we use this level, this wick here, we did react to it again, yeah, for a second time, but we only try to go for the first time the price comes back to a certain level, not because the second time we are inferring that the liquidity, which we have here on the other side, on the right side of the screen, is already observed, right? That's why we look to the next possible levels. Yeah, and the next possible is this support here, slightly support, broke down, and it was almost retested, but not fully. So we expect this area here at this line and above. Yeah, you don't have to place the order exact at the line. You can place it within the range there somewhere. We could eventually find some supply. Let's look at the order distribution if we can confirm that. That would be 27.89, 90. 27. Oh, I have to zoom out. $27.65. The 28 figure. The 28 figure is we see that it it stands out, particularly the difference between the buy orders at the 28. Yeah. These buy orders may be stops from sellers. Yeah. And here we have still a lot of selling interest here at the 28 figure. So that is slightly above our entry level, but it's within this 28 will be somewhere here. So it's within our area, right? It's within our area. And then at slightly above this is 25, 30, 45, 30, 30, 35, and 40. We find again some resistance here, somewhere here on this upper area. Okay, so this area is like 50 pip above our horizontal level. In this case, we got an entry at 27.89, and the stop loss goes at 28.29. It's within this area. Yeah, so there is the risk if the imbalance at this level is not enough to produce a first reaction, then we could see. So our stop is still falls here within this this supply area, but we take profits for 15 pips only at 27.30 74. At 74 here. So it's a really small reaction. We aim to just something like this. Yeah. Okay. Then we had something identified in the euro against sterling, and then on a sterling dollar we'll see as well if we have the time. Oh, we're short in time a little bit. Let me see if there are more questions. Okay. No, there are no more questions for the moment. Okay. Let's check it here. Euro sterling, similar area of interest here. This breakdown and the wicks thereafter, and also here more recently couldn't really get into that level. We have another one coming up here at 87.79. We prefer to take this first one, the 87.45 for 15 pip. Target at 87.30 with a 40 pip stop loss, but there are other levels above which are also interesting. 88.18. It's very interesting. But we saw here also on the distribution this level might be interesting. And we have this descending line here, which is more or less intersecting here by, well, still ahead, 10th March, but as they come closer together, so from the 8th, more or less, they're pretty much together here. And going back to the majors here, to sterling, yeah, we identified this level here of support. It's reacting now to this line here, this descending line. It was resistance here, broken to the upside, not fully tested here. It is being tested now. We have a level of supply here at 40.80, but it's still far from where we are now. More interesting here on the buy side, the 37 38 figure, the 38 figure for a 20 pip, 38.20 is a target. The market could, if it goes deeper here and breaks this line, it could target this horizontal, this vertical, this dynamic line from the bottom. Yeah, so that could act as a target actually. Okay, so I think we're arriving at the end of the session. So if you're interested in the signals service, this is what you get inside. And to get in on the signals page, it says fx3.com/signals, and here is how you can get started. There is a welcome board here and how to sign for the service, and this is where you can find the information. Okay, so thanks a lot for your time, for your attention, for tuning in, and for those of you who are part of the premium, we will meet again on Friday for the next webinar, and in between we'll updating on the new these new recent trade setups on the messaging. So thanks again for your attention, and see you later. Thanks. Bye bye.